We do a lot of videos on creating tax-free income in retirement. What about for a W-2 employee? In this example today, we want to talk about an alternative to a 401k. And with one of Barry's recent clients, he's going to demonstrate how this client used a properly designed whole life policy to create a large amount of tax-free income in retirement as an alternative to a 401k where he wasn't getting a match in that case. So with that, we're going to jump into this example. I want to emphasize that if you're getting a match, we're not necessarily saying that's a bad idea, but this is an alternative, particularly where maybe you're not getting a match. So with that, take it away, Barry.
Thank you, Steve. In our case study, we are looking at a 30-year-old W-2 employee, so he's receiving a paycheck every 2 weeks, setting aside $400 from each paycheck into a high cash value whole life policy instead of his 401k. It will turn into $1,440,000 of tax-free money and pay $72,000 every year in tax-free retirement income. $400 from every paycheck over the course of 1 year would equal $10,400 going into the policy. And you notice this policy is building up cash value every single year. And the cash value will grow guaranteed, and he'll also earn a dividend that will be reinvested back into cash value. So it's also earning compound interest. At the age of 68, retirement age for him, he will begin to take out $72,000 a year of tax-free income. The reason this is tax-free is because under the umbrella of a properly structured high cash value whole life policy, he gets benefits of money growing tax-free, money growing guaranteed, and the cash being liquid to him. He can use the cash throughout his life early on as his own bank. Here we're showing him using the cash as tax-free retirement income. He doesn't pay any of this money back. His death benefit will be used as collateral, and any income taken out will simply be deducted from his death benefit at his passing. $72,000 a year for 20 years is $1,440,000, completely tax-free. And he only put in $384,000. So he's able to almost 4 times the amount of money coming out that he put in. And that money coming out of $1,440,000 is tax-free. That's a huge benefit, because if that money stayed in his 401k, it would be 100% taxable. And those taxes would erode the amount of money available to him for income. So Steve, as you can see, it's a remarkable plan. There's no stock market volatility here. There are no hidden fees like he would have in his 401k, and the money's coming to him completely tax-free. Back to you, Steve.
Wow, so it's always cool to see tax-free income as an example in retirement. I've worked with a lot of retirees over the years, so that's interesting to see that kind of result. Age 68, he's taking about $72,000 a year in income. He's putting roughly $384,000 into the policy and taking out about $1.4 million tax-free. Those are numbers you really can't argue with. And in this case, with no match, it was a terrific alternative for this client of Barry's. If you want to learn more, I encourage you to check out your own numbers. Wherever you are, there's going to be a calendar link below. You can schedule a one-to-one with Barry. Also, if you have questions, if you like this particular example and you want to hear more about these kinds of issues, go ahead and leave a comment. We'll respond to your comment. And again, thanks for watching, and I'll see you in the next one.